Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from my birthplace, Calgary. And best of the season, a little snow shoveling going on?
Yeah, Jim, it's best of the season to you and also to all your listeners. We got our biggest snowfall yesterday and the night before, and this is there's like 1-2 feet of snow in most places, and then when you go to the drifts, you're looking at 4 and 5 feet. So there's cars stuck on the roads, and it's going to be a bit of fun when I have to go out later today to do a little more shoveling. So I'm going to have the pleasant call with you, lunch, and then go and shovel.
The UK is being pretty well boycotted by everybody because of the new strain of the coronavirus. Airlines and governments are cutting flights off to more than 40 countries, including Canada. How much could that cut into the demand for WTI crude, and what could that do to prices?
Well, on Monday and Tuesday, we had about a $2 decrease in the price of crude. So we went down from 49.5 to 47.5. because people weren't sure how long it would last, and it's a mutation of some kind. It's a faster accelerant in terms of getting the disease, and so it's already hit into Europe and potentially in the States. And so they shut the borders in most countries over 40, as you said, cut traffic to them. But there's now going to be a shortage of produce from Europe in the UK, so they're talking about giving tests to the drivers of the trucks on the French side so that they can bring the produce over to them. But it will affect demand. The question is, what will be the caseload? Will that number pick up significantly as it is in the States? And so the demand will decrease to some extent in the OECD, Europe, and Canada, and the United States. And the big problem, and the reason why I'm surprised we're bouncing at all today, is that OPEC is planning to increase production by 500,000 a month. The first 500,000 on January the 4th. So we're looking at April, March, April, February, March, April, bringing on a total of 2 million barrels a day. And yet today we had a 600,000 decline, which everybody was excited about, but they didn't take into account that exports rose by 472,000. So in reality, if it wasn't for an export increase, there would have been a 3.3 million barrel difference. And so that would have given you a 2.5 million barrel increase for the week. So that's really the problem, is that the demand in the States is coming down. It was down by 247,000 on the week to 19.1 million. And year to date, or year over year, it's down by 2.3 million barrels from 21.3 to that 19.1. So U.S. Recovery is not happening. Canada probably is not, especially with more lockdowns. So you're looking at weaker demand in the OECD. The only places where you're seeing demand increases, and when those numbers come out, markets say, wow, this is the other side of the tunnel. China has an increase in consumption, and so does India, and so that's where the positive side of the coin is happening. And then, of course, for us, it's going to take into May, June before we can see enough vaccinations and the herd instinct develop, where we'll see demand start picking up in North America.
LNG prices in Asia are at record highs. How high are they, and why?
Well, they went from, at the low $2 a million BTUs, and then, of course, the cold weather is hit in Japan, China, Korea, South Korea, and so we've seen LNG cargoes, spot cargoes, go to $12 US per MMBTU. So those are fabulous prices. we've seen Canadian prices, get up almost to $3. They're in the $2.60 range for an MCF, which is pretty good right now. So we're seeing, shortages start to develop for natural gas, and that's why natural gas remains my favorite commodity. Oil, I think there's still a lot of oil around there. OPEC's raising more production. If prices stay where they are right now, I think you're going to see U.S. production start to turn around, especially because we're seeing the rig count pick up. The U.S. rig count was up another 8 rigs to 346 rigs working, but it's still down from a year ago. But the Permian is seeing good rig increases as companies see $45 or better as reason to start drilling and bringing back production. And I think in the weeks ahead we may see that happen. So if you see U.S. production increases, continued weak demand in the United States and the OECD, and then OPEC brings on more production, I think we may see a little bit of a bounce into the beginning of January where you get near 50, a magic number that everybody's going to love to see. But then I think as we see the increases from OPEC and of course the lockdowns continuing in the States because of the increase in the COVID cases and the death rate, and of course we're now seeing rationing of health in many places in the States because of ICU bed shortages, 30% kind of numbers in California for the number of cases that are on tests that are turning out positive. So I think we're going to see oil break 40 sometime during Q1. And so I'm cautious still on the sector. And, I think people who've got great gains from the March low and we sent out a buy signal, should, consider taking some profits and having cash reserves for, potential significant correction in Q1 of 2021.
How long is it going to take BC to be a substantial exporter of LNG, and will prices still be high when when that natural gas starts to flow to Asia?
Yeah, so what's going on is that there was too many LNG plants brought on in 2019, 20, and 21, and so we had a glut of natural gas for a while. But by 2023, demand growth in Asia, especially Asia, will eat up all of the new facilities that are on, and new facilities are going to be needed in 2023, 24. So that's a good time for the LNG Canada project to come on stream, the Coastal Gas Pipeline to be full and moving gas from northeast BC to the coast, so we're looking at, I think a pretty positive environment. At the same time, of course, with, President Biden, President-elect Biden and our Prime Minister wanting to move more, on the climate change issues, on CO2 emissions, on, the taxes and get rid of coal, we're going to see more domestic North American demand for LNG, natural gas, as well as renewables. But that LNG or natural gas demand is going to be very helpful to the industry. And I think, we'll be looking at, $2.75 to $3 natural gas prices on a consistent basis in the next year or two. This year we're using $2.25 for our average price for the year. So in the spring and the fall, you might see sub $2, $1.50 kind of numbers, and then in the worst part of winter, you'll probably see $3 to $3.50. And we're about $2.66, I think, today for AECO. I think in the next couple of weeks, as we get some very bad cold weather, I think we'll see prices spike over $3, which would be very positive for the Canadian natural gas industry.
The Trudeau government's clean fuel standard will put another level of carbon tax on liquid hydrocarbons, but apparently they skipped on gaseous hydrocarbons. Was there any sense of relief over that in the oil and gas patch?
Yeah, there was. People were glad that the solids and gaseous were not included, so that's a positive, and we're not going to see our home heating bills go up substantially like we'll be seeing as these new taxes come in at the pump. We're all going to be looking at, 5-10 cents sometime in the next month or two, if they approve it. And then probably over the period of time to get to their maximum, we're looking probably 30 to 40 cent increment. So in Alberta, which you're paying, let's say $1.03, some point in the next 3-4 years, that number is going to be, if the price of oil recovers as well, where we're looking at probably $1.50 at the pump to fill your tank. And, does that mean you go to electric vehicles, or does that mean you go to more efficient, fuel-efficient vehicle? That's going to be something, for people to decide on. In BC, of course, you're probably paying $1.40 right now. That would probably mean a $2 handle, which we haven't seen for quite a few years.
Does that mean besides electric, people would look at converting their vehicles to using natural gas to power them?
You're talking something that I really don't have enough of expertise to give you an answer on. But if there were ways to do compressed natural gas or hydrogen, and we can either refurbish our vehicles to do that, or you buy new cars with incentives to go that way. I think we're going to see that over time. We're all talking Teslas and as being the EV and NIO from China, but don't count GM and Volkswagen and Toyota out. I think in the next 3-4 years we're going to see each of these companies have dozens of cars each that are EVs of everything from basic to luxury.
And of course, here in Vancouver, we have Newport Energy that uses a slight bit of diesel to help spark LNG to fuel large vehicles like buses and semi-trailer trucks. Is that a market that again could expand?
Yeah, I think between that and Ballard's, hydrogen power, battery, and fuel, technology, I think we're going to see a lot. I think between the money that's going to be spent by the governments on new technology and the industry now, and the capital markets opening up to a lot of companies that need capital for renewables. The VCs, the venture capital world is looking to spend more and more money. I think we're going to see a lot of technology change over the next decade. So for those people who are watching the renewable market and understand technology, there's going to be a lot of opportunities on an investment side. But at the same time, I think we're going to see, with the demand for the basic, fuels are going to be there, simply because, if the population of the world grows by 1 billion to 1.5 billion more people over the next decade, those people outside of, the OECD, are going to be wanting to have, transportation, which is why you're going to see, demand, which is right now, let's say, around 94 million a day, and prior to the pandemic, 100 million a day. We probably by 2022 will be back to 100 million, and there are a lot of forecasts out there that the demand for crude oil will be 106 to 108 million barrels a day by the end of the next decade.
We'll have more with Josef Schachter right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Josef Schachter. Josef, OPEC production and cheating. What do you see going on as we enter the new year?
Yeah, we've been seeing a lot of OPEC, cheating from many of the countries that are desperate for revenue, and of course we're seeing, Iran raise its production last month by 39,000. I've got the OPEC report right in front of me. Libya, which the civil war seems to be over, has gone from in Q2 84,000 barrels a day. They're now 1.1 million, or in November, and they're talking about finishing the year at 1.3 million barrels a day, and early next year going to 1.6. And then there's many other countries, Angola, Algeria, others that are needing more revenue. So I think that with the 500,000 barrels a day that OPEC is talking to bring back on in each of the first 4 months of 2021, that we're going to see more of a glut. And if the demand from Asia doesn't continue to accelerate to use that up, once we start seeing worldwide inventories grow, I think that's going to be a negative, and I believe that will happen in, March, April of the 2021 quarter. Let me give you some quick examples. In the Americas right now, we have 69 days of inventory. That compares to 60 normally. In Europe, this is really where the problem is. They have 90 days of inventory versus 67 normally. The area that's tight is Asia Pacific. They've got 58 days of inventory versus 52 normally. So you're looking at inventories that are quite high. In the OECD as a whole, they're 109 days versus 93 normal. So that equates to over 250 million barrels more than is normal, and that's why I think we got to be watching the reports as they come out, weekly from the EIA and monthly from the OPEC reports to see how much of a glut there is, and if that glut is growing, and OPEC continues to raise production because the price of oil is high, that's going to shaft things, and at some point the price of oil will start to come down. And I think it's very likely that we could see during Q1 prices below US $40 a barrel.
We'll have more with Josef Schachter right after the break.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, the Canada rig count is falling while in the U.S. it's rising, the reverse of recent months. What's going on?
Well, this is the normal breakup that we have in Canada. Everybody wants a little bit of a Christmas holiday. So historically, from December on, second week of December on, we start seeing the rig count in Canada come down. It went down by 9 rigs over the last week to 102 rigs from the week before, and we're down from 149 the year before. I think we're going to see the rig count drop by another 10 or 20 at least over the next week or two because of the holidays. And then starting week 2 of January, we're going to see a pickup in the rig count as we normally do. And it's possible that Q1 could be a decent quarter if these prices hold in. Natural gas prices are pretty attractive right now at $48 for oil. They're attractive. If, however, they busted 40 at any time, I think that would stop some of the oil drilling. But the natural gas-focused drilling, which is the majority of drilling, if you look at the rig count last week, given the total rig count in Canada was 102, 61 of those were drilling for natural gas. Only 41 were drilling for oil. So we may see the oil rig count come down on weaker oil prices, but natural gas prices stay firm. The natural gas ones will stay, activity will pick up.
Why was there no material tax loss selling season this year?
That was a surprise to me. I was expecting when we got into November that we would, because the index, the S&P TSX Energy Index at the beginning of the year was 146, and it's now sitting in the 90s. So we're looking at a 36%. We're 92 today, 36% decline from the beginning of the year. But I think with the optimism on the sector and all the positive comments, the mergers that we're seeing, Cenovus Husky, the takeout that we've seen with Torque and Whitecap, people are getting more optimistic. So they've decided, okay, I bought something at X dollars, it's trading at 40% X lower. Maybe I'm going to hold on because maybe it'll get back to my cost in the new year. But if I'm right that we see the price of oil go down during Q1, I think we're going to see lower prices. And we've seen that in a number of years in the past where there was a bad performance in the prior year. Market was down during that year, but there wasn't tax loss selling, but it was in the following quarter in Q1 when there was some market correction like we had this year in Q1, and then the price of oil got hit. We showed that in quite a few examples in our recent December Schachter Energy report for our subscribers. And we went through quite a few examples in it to say, here's what, what can happen some years, and look how much the decline can be in the first quarter. So be patient and wait for that next attractive buying opportunity. And when that comes, we'll send out an action alert to our subscribers saying, number one, it's an attractive window to buy, and pass on to them the specific companies with specific price levels that would be attractive to purchase the securities.
When do you see the next low-risk buy window, as you saw in March and discussed with our subscribers?
Yeah, I think that it's possible we could see it in March, April of this year. I think the key is going to be how bad, while we're getting all the vaccinations come out to, first responders and seniors in nursing homes, and then it'll start with the, over 80s and then 70s. But until we get to where the majority of the population can access vaccines, you look at the number of people who've passed away. They've had, I think, 5 days this month of over 3,000 people dying in the United States, and I think the count is like 324,000. There were targets, people saying we may only be 200,000 going back months ago. We're now, 324, I think, is the number today, and it's very likely we could be over 400,000 or, in just the next, month or two. And then depending upon how people, are cautious because of Christmas, then, then we could have the count not accelerate, which is right now the fear. And the fear is that we're going to have a massive increase in the caseload and the death count after Christmas because of people not quarantining, wearing masks, and distancing as they should. So hopefully people will be careful. In Canada, the count has gone up, and U.S. people are opposed to it. There's a lot of protests in the streets of people saying that they think they don't want to take the vaccine and they think the whole thing is a hoax. And of course, President Trump not wearing a mask doesn't help. So I think that, if the caseload does pick up, and the death count does pick up, and the economy has to go into more localized shut-ins, that would be very negative for the demand for crude oil, which would probably bring crude oil prices down. So I think that the next 4 months are probably going to be the most dangerous, and we're seeing those kind of comments from Dr. Fauci, from President like Biden, and from others. And you're now even hearing it from leaders in Canada, Prime Minister, and also many of the premiers are talking that this thing is out of control.
Joseph, all the best to you and your family over the holiday season.
And same to you, and also to all your listeners. And hopefully we get ourselves a great opportunity in the early part of 2021. And by the end of next year, we're talking about a wonderful year for the investors in this sector.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.